Hello and welcome to another quick update about HBAR. HBAR is coming down nicely while generally the market is in the, well, slightly green today. We have some slight upside today after yesterday's strong sell-off. HBAR is coming down quite aggressively, down today in line with expectations after price broke out of our ascending wedge to the downside. Expectations are that this is currently an ABC structure, and we determined the first key target here for the C wave at 4.7 cents. It will be interesting to see if the price indeed reacts to that Fib level. That is a relevant Fibonacci level because if we measure the length of the A wave, go to the high of the B wave, you can see this is the 100% extension pretty precisely of the A wave. This is a key target for a C wave. This overall corrective structure, which we call an ABC structure, completes the D wave of an Elliott Wave triangle. We should then see another lower high in an E wave, possibly performing a retest of the trend line of that ascending wedge pattern. Before then, another low should occur to complete the entire bear market. Yeah, this is very, very important to understand. I will be able to give you a target for that last low, which should be a lower low below the below the December 22 lows. I will be able to give you a target once we have that the end of the triangle in place, and it should go at least below 3.5 cents in the end. And that is only valid as long as price eventually stays below the 7.6 cent level, because a break above that level will basically invalidate the triangle wave count as it is. Now, I cannot rule out that this C wave might extend, but again, that's all speculation at this stage. At the moment, it seems to come down nicely in the D wave. The only concern I have is that just this, what we have here time-wise, I mean, look at the length of the A wave, also from how long it took. Took here from December to middle of February, so 1.5 months, okay? The B wave was very long, from middle of February to, middle of June. So what do we have? March, April, May, June, 4 months. This move of the June lows here to the August highs, 2 months basically. And it's unlikely that the D wave is going to be completed in a couple of weeks. So therefore, a few options here to consider. It could be that this 3-wave move that we see is only going to be, let's say, a larger, so ABC could be a larger A wave of the D wave, then a B wave of the D wave, and then another C wave of the D wave. It will just come down quite a bit, and only then afterwards we start the E wave. But it doesn't really change sort of the analysis at this stage. I just think from a proportional point of view, it would make sense to have a bit more of a stretched out D wave of the triangle. But in the end, in both scenarios anyway, we have lower prices expected, a reaction to the upside, and then we will see next. We have to take it level by level. We are moving in a triangle in which the market hasn't really decided where to go. You know, that's what happens in a triangle. It represents a balance of forces. So first of all, next level remains at 4.7 cents. A break below that level would send it down to 4.3. We talked about these Fibonacci levels before. They are targets, and also we can add the volume profile just to see, are there any levels where price should start to slow down? Not really. If I zoom out a little bit, volume spikes, slight volume spike starting basically at 4.9 cents, but no significant volume spikes around the Fib levels. Sometimes you see that, and that's typically then indicative of price slowing down or seeing a reaction. Therefore, there isn't much there, so it will be very interesting to see if price actually reacts to these levels. Yeah, that's my update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.